these indicators that I'm going to go through today form part of the often package that stands for order flow trading enhancements. And often has been around for about 5 years now. I joined the room, the trading room with Ray about 6-7 years ago. And having come from the retail Forex background, I was completely lost when I started listening to Ray, and he was on about futures and contracts and liquidity, depth of market, all this good stuff, and racing through, as he does, a lot of different concepts, and explaining to us that we need to put all these moving parts together to get an understanding of what is actually happening in the market. So I pretty soon came to the conclusion that if I was going to try and follow all these moving parts, I needed some help to do that. And as my background is software engineering, I started to look at building some indicators that would point out these moving part setups to me. At the time, about 6-7 years ago, Ray was working pretty much all of the time on Sierra. I think at that time, if I'm not mistaken, Ninja was just moving from version 7 to version 8. And the initial release of version 8 wasn't entirely stable. And you may have already got the idea that Ray is a bit limited in terms of patience when it comes to things not working properly. So he switched to Sierra chart. And so a lot of the early work was done on Sierra. He hadn't actually found TradingView at that time. I'm not sure if TradingView was around actually 7 years ago. But anyway, these indicators started life on Sierra chart. But as Ninja became more stable, then he started to port a number of the indicators over to Ninja. So I'll show you a number of indicators on both platforms. There are one or two that are only available on Sierra for the moment, more recent ones. So I'll indicate those when we get to them. But the vast majority of indicators are available on the two platforms. So what you're looking at the moment is a 5-minute chart of the S&P ES. And I've put a few indicators on here. I'll just explain what they are. You see that we have some colored blocks, particularly at the lows of these bars. There's one barely visible at the top of that bar. But these are absorption signals. What the indicator does is look at the volumes of trades at the top and the bottom of each bar, and tries to identify patterns that match with absorption activity. And if it finds such a pattern, it will paint one of these blocks either at the low of the bar or near the high of the bar. And as Ray mentions in terms of trading, it's a good idea to trade towards absorption and away from exhaustion. Now, the other signals you see on here, the parallel lines, horizontal parallel lines, the orange lines represent buying exhaustion, and the blue parallel lines represent selling exhaustion. So you can see that as we got into this downtrend, trading towards this absorption, there's a whole bunch of buying exhaustion signals here. So if you're in this downtrend, if you happen to be taking a short trade, then this is quite a good indication that you're in the right direction. As we get a little bit further down, you can see we have a candle here where we've got both selling exhaustion and buying exhaustion on the same bar. This is usually an indication that price is about to go into a balance area, Could be a long balance here or a short one. Here it's a fairly short one, just a few candles. But again, if you were in the trade on downtrend here, this is the sort of thing where you may decide to take some profit, or at least you reduce your position size, because it may well start to reverse. There's no indication at this stage of what it's going to do next. As it happens, it continues on the downtrend, more buying exhaustion as it goes further down, and some absorption here at the bottom edge. Then price starts to turn around. We see some selling exhaustion, first time for a few bars, but also some buying exhaustion. So again, it's not clear what's going to happen. Now, I should point out that this time here is it's in Central European time, which is my local time. So 15:30, this big up bar, is the cash open. That's 9:30 a.m. New York. So I'm 6 hours ahead of New York and 1 hour ahead of London. So we can see that as it was coming into the cash open, there was a bit of indecision, started to move up a little bit, and then on the open itself moved up quite sharply. We had buying exhaustion at the top, and then the bars that follow, again, we get this sort of balancing with both buying exhaustion and selling exhaustion. So it tells us a little bit about what's happening, but not really enough to give us confidence to enter any trades at this stage. So I'm going to add some additional indicators, still part of the scalping 6 or the base package. First one I'll add is a thing called Voltic. And Voltic paints these colored dots. You can see a purple one here, pale blue one here and here, orange one here, another purple. And these colored dots represent price levels at which Voltic has detected a level or speed of trading activity which is much higher than normal. The pale blue Voltic dots represent a price at which the speed of trading was at least double the average speed of trading up to that point. Now, there's a parameter in Voltic. You can determine how many bars it looks back to calculate the average. But if you're on a short-term chart, like 1 minute, 5 minute, we'll keep that value fairly low. Excuse me. Sorry, got orange one here, represents speed of trading, which is at least 3 times the average. And the purple one, examples here, represents a speed of trading at that price that was more than 5 times the average speed of trading. Now, obviously, this intense level of trading activity means that both buyers and sellers are involved. We have a small value printed just below each Voltic. You could see it's 3.13. It's either yellow, which means it was predominantly buying in that Voltic increased activity price, or it's pink, like here, and it's shown with a negative number. Ratios are not negative, but I put a negative sign on it to make it clear it's a bearish bias. So that means that it's predominantly selling activity within that Voltic region. So if you go back to this one, that's roughly 3 times as much buying as selling in this intense activity. And we had some selling exhaustion just before that. So you may well have expected to see price going higher. And I'm sure some of the buyers who got in here did expect price to go up. But they failed to move it. at all, didn't move one tick higher. So clearly, a lot of buyers who jumped in here are going to end up being trapped. You could see that in subsequent bars, they tried several times to move it higher, but exhausted each time on those 4 bars. And sellers eventually took control, moved it lower. Again, here, it's a positive bias. Moved up for a little bit, but they soon pulled back. And then we had some bearish bias here. Again, price went against them, but only for a few ticks before the buying exhaustion kicked in again, and then price moved down. Moving over to the cash open, you can see that this bar, this voltic at the top, which, as I said, is at least 3 times the average speed of trading. That was, again, slightly more bullish than bearish. 1.29 is just a little bit better than 1-to-1, so it's not a huge bullish bias. But on the next 2 voltics, particularly this one, which is at least 5 times average trading speed, that has a bearish bias, 1.63, and 1.66 on the next one. So we can see that the sellers are starting to move in and making sure that this previous high, which we're at now, is going to be protected. Now, price actually manages to trade up a couple of ticks beyond that, but pretty soon the buying exhausts and we start coming down. Now, at this stage, we're not sure still of which way it's likely to go. So we can add some additional information. I'm going to add one called the pressure line. Now, the pressure line, as you can see, it was fairly flat during this gradual downtrend, obviously reflecting a bit of indecision just ahead of the cash open. A little bit of a dip down here, but it started to move up just prior to the cash open, and then we had a strong move up on the pressure line. What the pressure line is measuring is actually the strength of a particular move using the speed at which price moves up or down, plus the volume that's involved there. So giving us an overall view of the strength of the move. And it's a good indication if the pressure line starts to change or diverge from the direction of price. And you can see it does that here. It's starting to move down over several bars while price is still moving up. And once it gets to these 2 bars here, it's down very sharply. Now, the pressure line, as you'll see in other examples, is a very valuable indicator in terms of giving you some advance warning of what price is likely to do, because it's getting feedback from the strength of the move within each bar to calculate just how strong is this current move. You can see it's very bearish at this stage. So there's an expectation that things could start moving downwards fairly soon. If you move on to the next bar, we can see that's the case. And the pressure line is still moving further down, still quite steep. Obviously, the steepness of the line gives an indication of the strength of the move in that direction. So we're clearly very bearish at this stage. I'm going to add the 6th indicator from this package at this stage, which is called measured move, because that will also give us some indication about what is happening and where. Now, the measured move is based on looking at the market structure and determining based on price movements and turning points within price movements and so on, volume as well. It determines, again, where price is likely to go. So it starts printing these levels in advance. So very useful type of indicator to have one that prints well in advance of where price is going to go, right? And you can see that we have two colors here, blue boxes and green. Now the blue ones represent minor measured move levels. They're minor, but they're still important levels. And we'll see that as we go through a number of examples, they're still important levels as far as price moves are concerned. So price will very often come to these levels, the blue levels, and stall there. May not reverse, but it will almost always stall at that level. So if you're in a trade and you come down to that level, it's usually a good idea to take some profit, perhaps exit the trade if some other indicators are pointing that or indicating that that's the right action to take. But certainly, be aware that that's an important level for price. The green levels, macro levels, are very high probability that price will reverse at or very close to that level. Now you can see that this level here started printing at 13:35 my time. So it's 7:35 a.m. New York. And price came down to that level. Let me just hide this. And price came down to that level at 15:10. So about an hour and a half later. So if you have some indicator on your chart that gives you 1.5 hours notice of where price is likely to go, you have plenty of time to figure out what you're going to do if price actually gets there. So you could have your plan in place for where you would exit a trade or add to a trade or whatever, depending on where price is in relation to this particular macro level. You can see that at the top side, we have a minor level here. And you can see that in terms of the up move, that the price stopped about one tick away from that level. It stalled there. There was a macro level just above. So when you see this sort of combination of indicators, we have a bunch of voltics here, two of which, one being a very intense speed of trading with a bearish bias. We have buying exhaustion up here on several bars. We have both minor and macro measured moves sitting just above, just a few ticks above. So the one trade, and also, as I mentioned, the pressure line heading downwards. So the one trade you do not want to take at this point in the chart is a buy trade, because all the signals are against it. If it goes up, it certainly won't go very far, because it has these voltic levels to deal with, and it has these two measured move levels to deal with. So it's very unlikely to get much higher. So a buy move would certainly be the wrong choice at this stage. Now, once we've seen price break through these previous levels of selling exhaustion, and we're below these three voltic levels, where there were clearly both buyers and sellers trading quite intensively, price is below all of that, that would be quite a safe place to enter a short trade. As I say, you're in line with the pressure line, which is moving down quite steeply. But you're using these voltics plus the measured move levels just above as a lean to feel quite safe that price is not going to go shooting up and stop you out. Obviously, you could put a stop a few ticks above here, but this would be a safe entry point for a short trade. Let's see how it worked out. You see again on the way down, we will get some balanced areas, particularly where it comes down to a previous low. and we had an earlier measured move at that level. So we would expect it to stall a little bit there. And we do get some selling exhaustion. Clearly, some of the sellers decided to take profits at that point. But the pressure line continued downwards, and there's no other measured move apart from this one that's close at this point. So we could stay in the trade, at least to see what happens as it gets down there. So it comes down to this measured move level. Again, we have a little bit of a stall there, a doji bar. But there's still buying exhaustion. The buyers are having no luck whatsoever, no joy in trying to move this higher. Pressure line's flattening a bit, but still downwards. So the sell trade is still on at this stage. As we get to this bar, here we have another Voltic coming in. Now, there's a slight bearish bias, 1.22, it's pretty much 1-to-1. There's still some selling exhaustion above here, but we're getting very close now to another more recent measured move level. And we can see that the pressure lines start to move up. So for me, at least, this would be a point at which to probably exit the trade. We'd certainly take some profits, maybe leave one runner in there to see if it'll continue downwards. But chances are it's about to go back up, which it does. So that example, which is one example, I think gives you an indication of how powerful the indicators can be, even though this is just the base package. We're not into the advanced indicators yet, but just how powerful they can be when used in combination, where we could see that we get a good read on the market in terms of which levels it has been at, which levels it's likely to visit, and also the strength of the move in each direction. So good good combination of indicators, even in a very basic package. Have we lost sound? Abby's saying she can't hear anything. But other people saying sound is good. I'll assume that the sound is good for now, unless lots of people say otherwise. So, Abby, you may want to just log out and log back in again, and hopefully that'll fix it. So, let's move a little bit further on, just to see what else happened during the day. I haven't checked too many trades on the ES. You say that in a lot of cases it just runs flat. It's the pressure line's not giving any real indication. There's a lot of buying exhaustion here, which makes it clear that buying is not a trade you want to take at this point. If you wanted to go short below these Voltics, then you could get a few ticks just before it gets down to this measured move level, because the pressure line was down at that stage anyway. Okay, just moving up to current time. So you could see that ES has been moving down. It's sitting right at a prior minor level, and we have a macro level just below. So if you happen to be in a short trade, now's the time to think about taking profits and watching carefully to see what happens, because there's a good probability that price may reverse if it gets down to this macro level. For the moment, the pressure line's still trending downwards, so no immediate danger, but it's certainly something to keep an eye on as it gets closer to that level. We'll see how it develops anyway. Could keep an eye on it. But that's where we are right now, that ES is down, but is likely to hit some resistance very shortly. I don't know if there are any questions on any of these indicators, or if everything is very clear this stage. I know a lot of people will be already quite familiar with them, those who've been in the room for a while. But if anyone who is new doesn't understand anything, then just fire the questions into the chat, and I'll try and answer those. So that was ES. I'm going to switch to a thinner market like gold, and same set of indicators. They're all on the chart here. So we have our measured moves, we have our exhaustion and absorption, voltics and pressure line. And just looking at an example I found earlier today, all of these charts are today's charts, by the way. I haven't gone back in time to cherry pick things. I just picked out some signals from today's market that looked quite interesting. And I want to draw your attention to this group of candles here. As it moved up to this measured move, you could see just actually hit it to the tick. And we had a very high intensity voltic. This is at least 5 times normal trading speed in here. It was slightly bullish in nature. So there were a lot of buyers still coming in here, but we were getting some indications of buying exhaustion both on this bar and a couple of bars later. So again, with this sort of combination of signals with the measured move particularly and the buying exhaustion, if you had been in a long trade up to this point, that would be a very clear signal for you to exit your trade at that point. And you can see that from there on, price started moving down. Also, if you looked at the pressure line, look for divergence. When price made a higher high here, the pressure line also made a higher high. But when price made an even higher high here, the pressure line made a lower high. Now this, as I said, is quite a valuable indicator for giving you early warning of where price direction may well change. And this type of divergence is typical of a price reversal, where you see the pressure line do this and the price is still going up. We'll see some other examples with other things like delta later on, but as part of the base package, I think you'll find pressure line in combination with the voltics and the measured move extremely valuable in helping you spot where trends are likely to stop. Is there more than 6 indicators for Sierra charts? Oh yes. They're currently in the Sierra chart version. I think there are close to 40 indicators. It's a bit more than available on Ninja at the moment. One of the items on my long to-do list is to port several of the Sierra chart indicators from Sierra over to Ninja. So we'll get there. For the moment, all of those that I've shown are also available on Ninja. But the often package is quite extensive. I'll show you briefly what is in there. Just very quickly. Here's the often indicator suite. So you can see it's in alphabetical order. So quite a few. All right, so that's the full suite. What we're looking at so far is just the basic package, the scalping 6. What are the dots on the pressure line? These are indications of, they're also indications of exhaustion and absorption. But although I coded them to give some additional confirmation, I found that the indicators from the base package for exhaustion and absorption work a bit more accurately than these. But again, it's something worth taking note of. You can see that one of the exhaustion indicators coincided with this up move here, where we did have buying exhaustion and a couple of bars. So it's not irrelevant. I personally don't use them as a single indication of a price reversal, but worth keeping an eye on them anyway. Extension quite good. Right, says as a newbie, should use Sierra instead of as you're asking a very delicate question here. There's a lot of to and fro between members of the group about which platform is better, Sierra Chart or Ninja. I mean, my plan is to have the same indicators available on both platforms. The only reason there are more on Sierra is that from my perspective, Sierra has a better development platform. So for coding and testing, I find it much more efficient. So I usually do my initial versions of indicators on Sierra Chart and then move them to Ninja. But I mean, I don't think there's anything you could do on one platform that you can't do on the other. As I say, it's mainly a development preference that I do the work on Sierra Chart first, simply because it tends to go more quickly. I find Ninja's performance, particularly when you're changing a lot of things on the chart, which I do when I'm testing multiple indicators, then Ninja's performance is a little bit lacking, whereas Sierra tends to be pretty much instantaneous when you change things. So that's the main reason. So I wouldn't say, you'd get into big trouble if I said, yeah, you have to go for Sierra, because all the Ninja gurus will be jumping in here. So both platforms equally valid. As I say, the plan is to get the same set of indicators on the two platforms. And if time is not so limited, I would be able to get there. But anyway, moving on. So we're still on the gold chart. It's a 1 minute chart, by the way. But you could see if you went into this short trade using the high intensity Voltic, the buying exhaustion and the measured move as a lean to protect your trade, and entered here like 1979 or thereabouts, and took it down even to this first measured move down to 1975 and a half. So you got about what is that, $350 in 5 minutes or so. Not too bad. So we'll move on, see if there were any other signals on gold. Here again, similar sort of thing. Macro level, measured move, with a couple of minor levels sitting right above. Look what happens when price comes into that macro level. Voltic, 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 one after the other. This is a clear indication that price is unlikely to go further down. So if you were in a short trade and carried it all the way through, this is the time to get out. Okay. So you see that price moved up quite a bit from there. So, I mean, using these indicators in combination, again, pressure line having been on the way down starts turning up. So again, confirmation that we're into an up move, and you should be out of your short trade by now. You could actually use these voltics and these measured move levels as a lean for your buy trade if you wanted to, because there's some selling exhaustion here. Sellers are not getting any joy trying to push lower. So you could at least get a few ticks on the buy trade if you decided to enter at that stage. Ninja charts matter. Yes, I know. I have a few digs at Reeve and Praveen and other guys about Ninja, but it's a good platform. And, as I say, the only thing I find a little bit inefficient is when I'm making a lot of changes on the chart with multiple indicators, and it's slower than Sierra, but otherwise they're both good. All right. I don't know if there's anything else on gold today. Just run it through to the current time so we can see the number of selling exhaustions you got as advanced warning as it's coming into this measured move. That's pretty good indication. Again, you get Voltic right at the bottom there as it hit into that level. So pretty good indication that this downtrend is probably going to finish here. See again, just getting close to these measured move levels. You see some minor levels here. Price hit that to the tick. You had a macro level just above. So again, you would know that price is very unlikely to get through that. And you could see that we had some pretty intense trading at the top here. Buyers obviously trying to move things higher, but it ended up going down sharply. Pressure line had already started to turn by that time. You can see that it was already on the way down before it hit that long bar. So pretty extensive down move. Then we get another intense activity here. The sell, it was predominantly bearish, not excessively so, about twice as much selling as buying. But the buyers obviously got the best of it and managed to move trade up a little bit. Pressure line showed, yes, we are a bit stronger on the up move, so it moved for a little while. But then pressure line started to move down again. And the sellers took back control. Buying exhaustion there. Another Voltic with a bearish bias managed to push it further down. And a series of absorption signals at that level, just as the pressure line starts to move up again. And price starts moving up. So this is, all right, we're up to current time. You see that it's balancing in this area. Few absorption signals at the top and the bottom. A couple of Voltics coming in here, so there's a bit of an increase in trading activity. Selling exhaustion on that one, so maybe the buyers are going to try and push through this this high here. So we'll see what happens. Just going to flick back to the. Yeah, this was the ES we were looking at earlier, and we were saying it would be interesting to see what would happen if it got down as far as this macro level. But in fact, it reversed as soon as it was into this minor level here. So it may still come back and retest this macro level. But for the moment, it's on the way up. Okay. You're showing examples from 1 minute charts. Are the indicators more accurate at one level? No, they will work on just about any time frame you want. The reason I'm concentrating on this is that last week when we had all the technical problems, it was essentially a scalping workshop. So I'm using the short-term charts because that's predominantly what we use for scalping. So, but the indicators, maybe I can just Let's try the ES, move that to 30-minute chart. So, I mean, you'll still get signals. They're intense voltic activity at the top of that bar, followed by buying exhaustion. So, pretty clear indication the next move is going to be down. And it was. So, yeah, I mean, you can change your time frame pretty much as you want. 10 minutes, 5 minutes, 1 hour. So, as you want. Okay. Was logged out. Did I miss which ones are not on Ninja? No, I haven't mentioned yet which ones are not on Ninja. So everything you've seen so far is also available on Ninja. It's only right at the end I'll show you some very recent additions to the Sierra version, which are not yet in Ninja. But as said, the plan is to have the same set of indicators on both platforms. So what else do I have? Oh, okay, this is the Ultra Bond. For those of you who trade treasuries. So again, it's a very similar sort of thing, looking at combinations of indicators. And we can see that up here we had buying exhaustion, Voltics with some fairly bearish bias, 3 times as much selling as buying. Went up a little bit, a couple of Voltics there where obviously the sellers provided some resistance. And once you got that buying exhaustion, you could again put a sell trade just below these Voltics and the exhaustion. And you get a few ticks here if you went in at 135.16 down to about 135.5, so around about 11 ticks, about over $300 in 5 minutes. So could be interesting if you're a bonds trader. So all of these basic package indicators work in a similar fashion, different markets, different time frames. So no problem if you haven't seen the market you like yet. I think I've got some on crude oil as well later. But that hopefully gives you an idea that even with a base package, you can start to get a pretty good read of the market and its current behavior and even its potential future behavior with the measured move. And this is up to current time. So you can see the Ultra Bonds moving up, just about to come into this measured move level here. So, in fact, it's just reversed from there, has gone down. Didn't notice that. So, again, another indication of how useful these levels are. You see the earlier one we had here, price came up, touched that, decided to go no further. So, certainly useful to have these measured move levels on your chart. As I said earlier, no guarantee that price will reverse, but it will usually always stall at one of these levels. So good to have them in place. All right. So just to prove we have no objections to using Ninja, we'll switch to Ninja now. And here we're looking at CL, again on a 1 minute chart. Let me just get that back. We just spread this a little bit so it becomes clearer. And I've added an additional indicator here at the bottom. I'm going to go back a little bit so we can see, because there are a number of examples I wanted to explain on the way through about how to use this indicator. But this is an indicator called the full VZ score, or full VZ score for those of you in North America. I'll refer to it as VZ score. And what this does is it's based on a standard Z-score indicator, which if you're familiar with it, the Z-score indicator, the standard one, measures how far price has gone away from its mean value. And it's measured in terms of standard deviations. So the theory is that if price goes more than 2 standard deviations away from its mean, then it's at an extreme value and will probably start to revert towards the mean. So whether it's at an extreme high value or extreme low value, so either above +2 standard deviations or below -2 standard deviations, that would represent an extreme value. Now the other, and the blue line is actually the price Z-score in this indicator. The other element, this histogram, is a volume Z-score, working in the same fashion, looking for extremes away from the mean. And what we want this indicator to show us is points at which we have extremes on both. And you can see an example here where hopefully it's clear that the pale blue line, as it comes up here, changes to a dark blue as it goes above 2 standard deviations. So hopefully it's visible just above the white line. It just changed from light blue to dark blue. We've also got an extreme of volume at the same point. Now that combination of price being extreme high with this extreme volume, very often, not always, but very often, will mean that price is about to change direction and go down. Now, again, as mentioned earlier, we never, ever rely on a signal from one indicator on its own. So we look for some other clues as to what is likely to happen to price. Now, we've got, just squeeze this a little bit. We've got a measured move level sitting just above here. So again, based on what we've seen already, price, the limit of an up move is defined pretty much by this minor measured move level. Too many M's. And you can see that, price is having some difficulty actually breaking this high. And the other lines I've put on here, I've got a red, a blue, and a yellow line. These are coming from a package called Trading Mantis, which Greg Schroeder developed. The same lines are available on Sierra. So again, you have no problem in which platform you use for this. But just to explain that the yellow line is a thing called book divergence. This is looking at what is happening in terms of changes on the limit order book. So if it's going up, it means we're getting more bullish bias in the order book. And if it's going down, we're getting more bearish bias. And this line will tend to follow price pretty closely. It can occasionally diverge, but it will tend to go up when price is going up, and it will tend to go down when price is going down. So that's one indication. If we see that start to turn down steeply, then that's an indication that the the limit order book is showing a more bearish bias now, having been bullish for a while. The other two lines, the red line is the tick delta. Tick delta is measuring whether price has upticked or downticked at a particular trade. And if it upticks, it will add to this line and be more positive. If it downticks, then it will subtract from this line, be more negative. So you can see that the tick delta was pretty strongly up, but then started to reverse and go down. So that's an indication that the bias is starting to alter. The blue line is a volume delta, and again, this is following price up to this point, but again, it too starts to level off and then start moving down. So even though price is still hovering around the highs here, we have the two deltas and the book starting to move down. Plus, we've got this full VZ score signal saying we're at an extreme high level here. There's a good chance that price may well change direction. So that combination, plus we have our measured move sitting above, which is probably going to block any move higher. That combination of indicators can make us feel pretty comfortable about potentially entering a short trade here, or at least if we were in an up move from here, then we would exit the trade. Okay. So you could, if you did take the short trade, then on the way down, you still got all three lines, the two deltas and the book. Okay, there's some ups and downs, but predominantly they're trending downwards. Now we've got a measured move level sitting down here, and as we know, these are areas where we need to be pretty careful if price comes close to that. So we're pretty good to stay in the trade down to this level. There's no significant, we had a couple of voltics here, and as we're coming close to this level, you may want to at least take some profits. But the book went up a little bit here, the deltas flattened a little bit here, which is why it would be useful to at least take some profits. You may want to leave one position open as a runner to see what happens. It did go a little bit further down, but we have this macro level sitting right below, and then we get the price moving up for a little bit until it hits this macro level. That's the point at which, if you were still in the trade, you would definitely exit, because there's a very good chance that it won't go much further. And indeed, it starts to move up. So again, combination of signals could get you into a nice trade. We made some decent money on the way down. If you stayed in that trade all the way from about just under $76, went down to 75.30, say 75.40. So 60 ticks, $600. Yeah, it's not too bad. 20 minutes work. Okay. So that's the VZ score. I'm not sure if you had any additional. Right. Here's an interesting one. Just move this up a little bit so we can see where we are. Let me just check the questions here. He's only for futures. Basically, anything that's got order flow, you can use it. I personally don't do any stock trading. I'm not sure if anyone else in the room does stock trading, but if you have order flow, then you can trade it. You can use these indicators. Is the measured move the same as the one Ray shows on the YouTube videos? Not sure which YouTube videos you mention, but if he's using a measured move, then there's only one measured move indicator in the package, and this is it. I'm sorry, I don't know which videos you mean. If you have a screenshot or something, I'm not sure you could put it in here, but I would say if it looks similar, like green and blue blocks on the chart, then it's this indicator. No need to apologize about questions. It's all good. On Compass FX videos on YouTube. Yeah, I haven't personally watched them, so I can't say. But as I say, if it shows green and blue blocks like this, then it's almost certainly the same indicator. I mean, Ray posts all sorts of levels on his charts, so I can't say 100%. It's definitely a measured move. Let me just move this up. Okay, so you should be getting familiar with this sort of setup by now. So we've been in a gradual down move on the way through here. We had some voltics here as it went through this prior low level, going into the measured move. Bounced off that briefly, but the deltas were still pretty much trending down. It's not a steep move by any means, until we get to this bar here, where price goes down pretty sharply. We have a number of voltics all in the same bar, different intensities, small, medium, and high intensity speed of trading as it hit in through these measured move levels until it got to the macro level and stopped right there. Now, at the same time, we've got a signal on the VZ score, full VZ score. Now, this would normally be an indication that we're at an extreme low with high volume, and for VZ score, that would typically be a buy signal. However, one of the things I want to point out is that when you have this situation where you have a fairly high intensity voltic sitting just above, now clearly there were a lot of sellers involved in that activity, both buyers and sellers, but certainly given the strength of that down move, there were a lot of sellers involved. The book, on the other hand, has shifted right to the bullish side, but started to come down again. And you could see that the price didn't actually go up at all in that sequence of candles. So if you had taken this full VZ score signal on its own at face value, without noticing you had all these voltics and measured move levels just above as well, you might have jumped in a little bit too early. So if you move it on a little bit, I think here we get some additional voltics. And at this point, the sellers had tried to move price lower and failed. We had high intensity voltics, medium intensity voltic at that level. We tried to break through the bottom of this measured move, macro level. Failed miserably. The book goes up quite sharply. The deltas, which were starting to move down, now flatten and start to move up. The Z-score line, the price line, is still moving up slightly. Now, we're some way away from this signal, so this is less relevant than it was before. But it's important that we are paying attention to this measured move level, and we're seeing very strong resistance to moving below that level. So the fact that we've got the book moving up, the delta's moving up, you could be using these voltics as a lean for a potential buy move if you are so inclined. And it did indeed move up to the next measured move level. So again, just some careful interpretation of what's in there, not just taking one indicator signal at face value and saying, oh, that sets as a buy signal here. Very often it would be, but not in this case where we have that intensity of trading just above us, where the other measured move levels, very recent. So important to keep an eye on how things work out all the way through. Okay, and we can move this onto the current time as well, see how we're doing. So at the close of the markets now anyway, so we're not going to see much in terms of trading activity from this point onwards. But anyway, I think that's current time. You can see again, measured move levels still quite effective in stalling moves in each direction. So pretty useful on all markets and different time frames, as we said before. What are the lines? If you mean these red, yellow, blue lines, I mentioned briefly earlier, the yellow line is the limit order book. So if it's rising, that means the order book is becoming more bullish. So we're seeing more volume going in on the bids than on the offers. If it's going down, then the reverse is true. So that's the limit order book, the yellow line. The red line is the tick delta. So this is measuring whether price upticks or downticks on trades. So if we see it moving down, that means we're having more downticks than upticks on the delta. So again, that's a bearish signal. And the blue line is the volume delta. And this is aggregating trades at the best bid and best offer. So at the inside bid and offer prices on the depth of market. So again, if it's moving down, that's bearish. If it's moving up, that's bullish. Okay, so usually these lines will move in a general direction of price, but we do occasionally get some divergences, and Ray did a fairly extensive explanation of using particularly the delta lines in your trading, and I think that was part of the scalping workshop at the end of June. If I remember rightly, it was on the second day. So if you have access to those recordings, then it's worth checking that out, because he went through quite extensively how you can use those delta lines. Any other questions? How did you come up with... Hang on, just lost my screen there. How did you come up with the lines? Also, how do you use the lines? Basically, the lines were defined by what Ray requested in terms of he wanted to have some indication of what's happening with delta, both tick delta and volume delta, and also what was happening on the depth of market. So the only parameters basically that you need to deal with is on the delta indicators. I should point out that the cumulative tick delta and cumulative volume delta are standard indicators on Sierra, so they're not part of the often package, so don't go looking for them in often. They are standard indicators on Sierra. Just let me show you very quickly. This is the list of studies available in Sierra. So if I go down to cumulative, you see them here, cumulative delta bars for trades, up, down, tick volume, and volume. So those are standard indicators, nothing to do with often, okay? So those work exactly the same way as the Ninja versions. Ninja didn't provide them as standard, so Greg coded these to put them on the charts. But it's not something that I or Greg came up with. It's just something that Ray was using as part of his moving parts scenarios. In this is what you need to look for, guys, in your trades. And he's done a number of very large number of trade sessions or training sessions rather, using these three lines. So if you have access to the recordings, it's well worth spending some time going through those. So they're very valuable. Do you just use the three for all your trades? Personally, no. I sometimes use them, but I'm not using them frequently. There are a lot of guys in the room who have them on their charts permanently and use them extensively. So certainly if you post questions in the user groups for the Mantis package or the Often package, and you'll find people who use these three lines quite extensively. And as I say, Ray has given a large number of training sessions based on these three lines. So you can check those out as well. I purchased Often a time ago. Do I need to upgrade to Scalp 6? No, Song. If you purchased the Often suite a long time ago, then you have the Scalp 6. This was just a packaging of 6 indicators, which you already have. It's the exhaustion, absorption, pressure line, voltic, and measured move. Those are the 6 indicators. And you'll already have those if you have the indicator suite. Where is the current Often suite version now? If you restart Sierra, I think you're on Sierra, if I remember correctly, you'll automatically get the latest version delivered to you. So I can't remember offhand what the version number is, but it will be delivered automatically to your Sierra data folder if you just restart Sierra. There we go. Probably 2508. So as I say, if you restart Sierra, you'll get the latest one. Right, that was it for full VZ score. Move on to what else we got? Not sure if it's this one. So here again, we're looking at what happened on the ES We'll go back again because we've got multiple signals on here. And let's see. Yeah, left some lines on there. Get rid of that. So on this chart, you see it's fairly similar to the earlier one, where we have the two delta lines. The reason there's no book line or book divergence line, the yellow one, at this stage, is that the book divergence line only plots in real time. So on this particular chart, I decided to add a new indicator, which is called volume triggers. I'll explain that in a minute. As I decided later in the day to add that, it recalculates the chart, and as a result, you lose all the history from the book divergence. However, good news is on the way, ninja traders, because I'll show you a version in Sierra shortly, which happens to retain the history of the book. So we'll see that shortly. But what I wanted to discuss here is this. You can see a number of text items, TST, trap, and so on. And this comes from an indicator called volume triggers. It's available on both platforms again. And what this does is identify certain order flow patterns which may indicate where price is going to stall, reverse, or reach an end of trend, for example. So the bars marked as TST or test is what's known as a shakeout bar, which is where prices moved into a new low area or a new high area, but has failed to follow through. And so obviously that can be potentially an area where price is about to reverse. Question, what is ES? That's the S&P. It's the symbol on futures is ES for the S&P. There's a micro version as well called MES, symbol for the micro S&P. So we're on the S&P 1 minute. So here you can see that we have our old friend measured move, and price came down, and we had a Voltic and a test bar. And at that point, both the tick delta and the volume delta started to move up. So that suggested that we've got potentially a change of direction here. Didn't go very far, and then the delta started to move back down. And at this low level, just below the previous low, we had again a series of test bars or test signals, and one with a trap indication against it. And this is where the indicator has identified a pattern which seems to suggest that we have some trapped sellers at this point. Now, at the if you look at the deltas, you can see the tick delta move down slightly, but the volume delta has started to move up, and that's a sort of indication that we're starting to see some sellers getting trapped here, because they're continuing to move price down, but the volume has dried up. It's started to move up on the buy side. So again, it's not 100% guarantee, but this is when you see this sort of combination, several test bars and a trap in the same location, we're just below a measured move level as well. So pretty good probability that price will stall here, at least, if not reverse. You can see we have some test bars on the upside here as we move close to this measured move level. So again, none of these are entry signals on their own. You wouldn't enter a trade just on the basis of seeing a test bar, but it gives you an indication of how strong is the move at this current time. So if you are in a trade and you see these things start to appear, so if you're in a downtrend and you see these multiple test bars and trap, or if you're in an up trade here and you see again several test bars, you may want to think about exiting the trade, or at least reduce your size. Okay. So let's move on. Because I mean, these when you're watching the deltas as well, they had started to turn down at this stage. So you could be forgiven for thinking that, you know, this is about to go into a downtrend. But you, at that point, you still have this level, measured move level, although it happened some time ago, is still relevant. Price didn't really manage to break through convincingly and close below it. So it's still relevant, and you know, it's still sitting just below this price level. So it's not a short trade I would take, certainly, at this point. So let's move on, see what else we have on this chart. Now, here's a good combination. End means it's identified an end of trend. We have another shakeout bar, and we have a trap indication on this bar. Now, prior to that, the deltas were going up pretty steeply. So you might have been forgiven for thinking, yeah, my long trade is doing pretty well here. It's got strong legs. It's ready to go way higher. But again, we're into measured move territory. One, it's just ticked into and stalled. There's another one just above. So again, this is not a long trade I would stay in at this stage. In fact, seeing that combination, if I were in the long trade, I would definitely exit at this point. It's a very strong indication that it's the end of the road for the up move. And as you can see, it moved down pretty closely. Now, strangely enough, it said end of trend here as it got back down into this sort of balance area. But that was not confirmed by the deltas, and there was no measured move immediately in that vicinity to suggest that it was going to stop there. So that's an indicator that, okay, interesting, moved up a little bit, but you know, no big deal. It wouldn't be, if you were in a short trade at this point, you wouldn't necessarily exit. Maybe if you're cautious, reduce your size, but at that stage, the deltas certainly indicated it was going to continue down. Now here we've got divergence between the volume, the tick, volume delta and the tick delta, where the volume delta is going up pretty steeply, suggesting quite a bit of buying coming in, but the tick delta is moving down still. So take this as an early warning that if the buyers are coming in such numbers that they are going to stall things and move price to the upside. Okay, so again, you had a series of test signals as it got into this low, and then eventually the tick delta decided to join the party and move up as well. Isolated signals like this test here, not truly meaningful. You have to look for other things in the same direction. Now, the two deltas started turning down, but just on one bar, it's not too significant. They continued down, so you would certainly think twice about staying in the trade, but then they reversed again and started going up, so no big deal. Got a Voltic here at this level as we get back to this previous high where we had the trap. So not surprisingly, price stalls at that point. As we move on, you can see that the deltas indicated an up move for a while before eventually it took place. Okay. Oh, getting close to an hour and a half already. At the start, I was going to say this will probably take about an hour, but I'm glad I didn't. Getting as bad as Ray for timekeeping. Let's move this on to current time so we can see if there's anything interesting up here. As we're at the end of the trading day, we won't see very much, I don't think. You can see as we got into the close, we had a series of trap and test bars there. So price was clearly not going to go too much higher. We had these measured move levels above anyway. Okay. That's it. Right. I don't know if there are any questions on that. Will you send out a recording? It's great stuff, but I missed quite a bit of it. I won't send a recording, but Kim will. I'm sure she'll give details when we get to the end of the session. Nice long on tick, looking back up. Yeah, I mean, you, Theo, as I said, you need to keep track of what is happening on these lines as you're going through, because they will give a pretty good read on the behavior of the market, and use them in combination to get the best possible or most accurate read of potential market behavior. I have tried everything to get the sound working. Only screen shows. Hope there is a recording for this. Yeah, Naga, you won't hear this, but yes, there is a recording. You tried a different browser. Yeah, try Edge. I know when we were first testing this room, we did have some problems trying to project Ninja charts using Chrome as the browser, and we switched to Edge, then we got it to work eventually. But anyway, yes, try a different browser. I'm not sure if I missed any other questions. If I'm in a trade, which indicator from often do you recommend for reliable target based on order flow? Hey, Song, you want the Holy Grail indicator? it's a very vague question. I understand what you want to know, but it really depends on what you are seeing on the chart at the time. I would say that things like measured move will certainly give you a good indication where price is likely to go. We've seen, hopefully you've seen, on a number of examples I've shown, that price will very often trade to these levels and then stall and even reverse. So those are good indications that price of where price can go, but there's no guarantee. And you need to be watching all the moving parts, basically, as I've been saying on the way through, whether it's the delta lines or whether it's the voltics, the pressure line, so on. Looking at all those things in combination can give you an idea of where price is in a strong move and continuing to be in a strong move and likely to stay in that strong move, or you're getting some early indications that price is about to change direction. Excuse me a minute, I'll just switch this off. So you need to watch a number of indicators in combination. And I'm sorry, there isn't an easy answer to your question of which one indicator to use to get a reliable target. Sorry. Okay, I think we're up to date with the questions. Would you say the volume or book divergences are the best leading indicator among book tick? Geo, I think, again, as I said earlier, Ray did a whole series of lessons on using these three lines together and how to look for and interpret divergences between them. It's, as I said, a number of traders use these three lines extensively as part of their trading. And it's certainly a very powerful combination. When you get the divergences and interpret them in the right way, it can give you a very clear indication that price is about to reverse, or we've got trap traders or whatever. And there are a number of interpretations you can get from divergences between these lines. So if you have access to the recordings that Ray has done, and they're all quite recent, then you could see how to interpret these. Okay. Trying to improve my auto trade system for a better target. Okay, Song, if you manage to get your auto trade system working well, then let us know. But as I said, there's no one indicator that will give you the reliable exit point. Are you covering TV indicators in this presentation? No, Nags. I'm sorry, I'm not. As I said earlier, or I think Kim did, Greg Childers, who developed the TradingView indicators, unfortunately couldn't join us today because of his other commitments. But we will arrange a presentation with Greg as soon as we can. Wish that I could just get this setting. Not sure what you're referring to, Alan. Sorry, Alan, I'm not sure which setting you're referring to. If you repost more details in your question, we'll try and answer those. The three lines are delta? No, the three lines, the yellow, red, and blue lines, which are on the chart at the moment. The yellow is the book divergence, so showing what's happening on the limit order book. The red line is the tick delta, and the blue line is the volume delta. So there's, Voltic is not part of these lines. Voltic is the one that prints these little dots. You see one here, this blue dot that comes from Voltic. And some more over here. Okay. Voltic is good for leans for absorption shows. Yeah, Ian, it's a good point. It's the fact that there's intense trading activity is worthwhile bearing in mind before you enter a trade. As I showed in one of the examples earlier, there was a buy signal, and I think it was on the full VZ score. There was a buy signal there, but we had some pretty hefty Voltics sitting just above it. So you wouldn't want to trade into those. Once price had moved on a bit and you were above those Voltics, then you could use them as a lean for the buy trade, and it continued up quite well from there on. But yeah, they're very good signals for to lean against when you're considering your entry. So there are whole classes on the anomalies. Ray has shown about distance to hard entry. Yeah. So exactly, Theo. Good. It's a good idea to review those lessons that Ray did on the 3 lines and review them several times. Why are measured move lines different thicknesses? Basically, it's based on the calculation of the market structure. In some cases, the area at which it expects price to reverse will be pretty clear and precise, and the block size will be quite narrow. In others, it will be a wider area, but still, you know, from the bottom to the top. Well, if you were coming up to this macro level at the top here, getting at that low of the block is still important. You would want to be very, very careful if you're in a long trade coming into the bottom of that block. The fact that the top of the block is a bit higher up doesn't mean you're safe to go all the way through it. So it's merely down to the algorithm that calculates the market structure and the areas in which reversals are likely to appear. Let's say some of these levels are on the chart hours beforehand, so you have plenty of time to think about what you're going to do when it gets there. Yes, please do. Please do what? I'm sorry, I'm missing a bit of the chat, so I'm maybe way behind on what your comments refer to. Delta divergence. So these lines I'm showing on the Ninja version, those are called delta divergence. You can see the indicators at the top here, called delta divergence. So the red and blue lines that you see here, those are delta divergence indicators. And the yellow line is called book divergence. Can all indicators in the sweep pack be used in Forex trading? The thing about order flow indicators is that they need order flow to work. Now, Forex, the normal Forex platforms do not have order flow, certainly not in the sense that the indicators use them. You need the level 2 data. And what you can do is obviously trade, instead of trading Euro USD, you could trade the 6E, which is the Euro futures contract, which will move pretty much in line, or at least the Euro USD will move pretty much in line with the futures contract. So In that way, you can trade the forex pairs, not the crosses. So things like euro yen, for example, you wouldn't have an equivalent in futures. But there's no reason why you couldn't put the 6E and the 6J on the chart together with some other value lines and trade them accordingly. But forex platforms, in the normal forex platforms anyway, won't give you the order flow data that the indicators use. For old members, where do I find the recordings? I'm sure Kim can direct you to them on the, but if you sign into your members area, you should see some indications on the web page of where to go into the archive and find the recordings. I'll leave Kim to explain that because I'm way over time already. Settings for book, tick volume, can it get them to work? Okay. Well, there is a template. If you've downloaded these, I'm assuming that you're on Ninja. If you downloaded these from the Mantis OneDrive, there is a template on there that you can load into Ninja, and it has the settings already prepared for you. You may want to change the colors on. I think the tick delta is a different color, but the settings for the 3 lines that are in that template. So check out the OneDrive and download that template. If you can't find it, I'm sure some of the guys in the user group will help you out. What PC specs do you recommend for these charts on Sierra and Ninja? Well, to give you an idea, this presentation with the charts I've shown are running on a laptop that is, I think, 9 years old. It's not high spec by any means. So I would say Sierra is less resource consuming than Ninja in general. It obviously depends on what you put on your chart. The one thing, and you'll see this in the often user guide at the end, I got some recommendations about what to do if you're having troubles with performance. One of the things to be careful of is how much data you load on the chart. I mean, in both Ninja and Sierra, you have options to identify how many days of data you want to load on the chart. Now, if you're trading something like 1 minute charts or 5 minute charts, you don't need 30 days of data. And the thing to remember is that when you make changes to the chart, it'll recalculate those 30 days of indicators. Now, to some extent, we can limit that by programming not to go back further than a certain number of bars, but just use common sense. I mean, if you're trading on a scalping strategy on a 1 minute chart, you're not really interested in what happened 30 days ago, not even 3 days ago. So, just trim the data to what you really need to trade the way you need to trade. So I think you don't really need a very high-powered PC to run the indicators. Now, having said that, some of the guys in the room will trade with about 6, 7, 8 monitors, all showing different things, all running different time frames, different indicators, and so on and so on. If that's your bag, then you may need something pretty heavy to drive it all. But as I say, if you just need a simple screen showing what's happening on one chart at a time, or even a couple of charts at a time, then maybe a 9-year-old laptop is all you need. Okay, Forex has no central exchange. There's no real order flow available. So indicators tried to simulate. Yeah, so that's the point I think I made earlier, Ian. Thanks for confirming that. Right, I think we're up to date with the questions. I'll just switch back to Sierra for a minute. Another indicator I'll show very quickly is a thing called P-Rev, which is the one drawing these triangles and bars. This is another scalping indicator. So it's not one that you should look to get massive moves out of the market. But again, it's looking for order flow patterns. And when it finds them, such as here, prints a down triangle, meaning this is the bearish pattern. So price moved down. A yellow block here. The triangle disappeared, which meant that it before the bar closed, it had a change in the pattern, which rendered the indicator or the signal invalid. So up to you whether you decide to take that trade or not, but it was actually invalid. The bars the blocks are placed at the price at which it identified the pattern. So here, for example, it did actually go down quite a bit before going back further up. So as a scalp trade, you could have got a few ticks out of this on the ES. Again, a couple signals in parallel here. Again, a few ticks. Small up move on the bar itself before price moves up. So again, this is again an indicator that's available on both platforms. These lines, let's say we're at the end of the day, so there's not a lot of meaningful activity here. Let's see if we can go back a little bit, find something interesting. So again, this we see a down signal here. The deltas are in our favor as well, which is good to know. There's a buy signal here, but the delta's definitely down. Pressure line down as well. So that's not a buy signal I would take just on its own like that. As we get down to the measured move, we can see some voltics here. Back up. Small sell signal. Again, not a lot of confirmation from pressure line or the tick delta. So it obviously didn't go very far. Once you get up to this level, the volume delta is starting to move down. Tick delta's a bit undecided still. Pressure line is down. So you could take a sell there, sell trade. There's no immediate measured move. These horizontal lines also come from the measured move indicator. They represent what Ray quite often refers to as the tipping point or a half back, which represents basically the 50% of the last up move or 50% of the last down move. And quite often price will respect these levels as well. Not often to reverse, but quite often to stall there. So you'd have time to see here it got down to this 50 level and stalled. So again, it's perhaps a convenient point to take some profit if you happen to be in the down move. Goes back up and hits the 50 line on the other side. So useful lines again to have on your chart. Again, don't want to spend too much longer on here, getting up to 2 hours. Definitely as bad as Ray. Let me show you quickly one more thing, and then we'll hand over to Kim. So this is we're on a gold 1 minute chart here. And this is one that is only on Sierra for the moment. Again, I'll go back into the trading days so we can see some more meaningful activity. But it's again a scalping indicator. So the idea is that it will print the signal pretty close, pretty early in the bar's development. So you have time to jump in. It prints the current bar score. What it's doing internally is looking at the moves of gold against other metals like silver and copper and so on, and also against the deltas. And based on those relative movements, it computes a score which will be between -8 and +8. You can see it at the moment, it's 0 based on the current bar. But you'll get a score between -8 and +8. This is why it's 0, because we have a doji bar here, no clear direction at all. I'll leave it sitting there for the time being, so that just in case a score appears here. But you'll get a negative, very quickly flashed up a positive score there as it moved up. Oh, current bar score 1. Now in the indicator, you can set a filter. Say, I only want to see signals if the score goes above 4 or above. It's sort of 0 to 8 is the range. Currently, I've got it set to show signals anything non-zero. So you could theoretically jump in when the signal appears, but you'd want to have some other indication. So we'd normally put some other indicators on there to give some confirmation of the strength of that particular signal. But it works out pretty well. I mean, it's a scalping signal, so don't go looking for more than a few ticks in either direction. It won't give you that. But I find it's pretty effective. Quite a high percentage of correct signals. You'll occasionally get one pointing the wrong way. There's an up signal on a down bar. It got an up signal on the up bar following that. So a couple of ticks is all you're looking at. So your stops will be pretty tight anyway using this indicator. The other thing I want to mention quickly is these 3 lines. Now the 3 lines that we looked at on Ninja, the book, and the 2 deltas. This is a book line on Sierra chart. So it has the same limitations normally in terms of losing history because it only plots in real time. The same is true, the other 2 lines on here, stacking and pulling. You see it in yellow there, stack and pull, and recent bid-ask volume. All 3 of these will normally reset if you change anything on the chart. However, if you wanted to change time frame, for example, from a 1 minute to a 5 minute, lo and behold, the history of all 3 is still on the chart. Right? So you can go back to 1 minute as before. And this is a feature recently added to Sierra. And my plan is to use some of the indications from these lines to refine the bar score we get from the gold scalper. So that's, again, in the to-do list. So we'll be implementing the same sort of retain history deal in Ninja as we have now on Sierra. Hopefully before too long. But, time is the only limitation at the moment. I don't know if I've missed any questions on the way through. Is the PREV going to be available? It is already available, Theo. PREV is already in the Ninja often package. HFTs. Right. Specs. Need to how it will work. Yeah, I'm sure if you pose the question in the room about what sort of spec computer you need, you'll get a range of opinions. Say, if you're just for something basic, you don't need a high power computer. Pressure line diverging. Pressure line, delta line, some indicators reflect 50% of last stop move or down move, often respected also current basket. Yeah, I think I covered that, Michael. This scalping system, if you mean the one that's on the chart right now, that's a gold scalper. As I say, it's only in Sierra for the moment. What is the underlying date? Limit order big indicator from ask a bit difference. Yeah, the indicator, you can choose a number of levels around the best bid, best ask prices, which you want to monitor the liquidity. And basically, you can have bid minus ask or ask minus bid, depending on what your preference is. And it will plot that line. You could plot things like stacking, pulling as a histogram as well, if you want. But basically, you have parameters to select what you want. So, okay, thank you. All right, Kim, I think we're done. Sorry, it's taken 2 hours, which is about double what I expected. But anyway, we had lots of good questions.
Thank you so much. As always, we appreciate you. I think we got through a lot of them, and we've had technical issues before, so I think this answers some questions. One question that I've had and I had to, not sure if I heard you answer this. If someone's on a demo or the free version of Ninja, can they use the Scalping 6 package, or do they have to have different data to be able to run anything?
No, I believe on the free version and trial version, and this is true also for Sierra, they can use the indicators.
Okay, perfect. I've had that question asked several times, and I thought that was the answer, but I thought, you know what, I better ask that question. And one of the things that I'm hoping that some of you guys picked up on, that as valuable as these tools are to be able to help you get into a trade, I hope you could see as well, they're very valuable to help you manage a position for, when you learn and spend that time to be able to get in and, stay in a trade, or, if you have multiple contracts on, places that you may want to take some profits. So I think as valuable as these tools are for helping you get really good, precise, precision and execution, I think they're good for helping manage trades. So hope that helps on that side of it. And how and where is everyone on that. If we can answer any other questions, I'm going to go ahead and I will bring up so we can answer any questions for you guys. I'll share my screen. There we go. Hopefully everybody can see that. So we've already done the welcome, so we're already past past that point. We've already done our disclaimer, and as you know, we've got TradingView, we've got NinjaTrader, and Sierra Charts covered. So the different packages that David was showing today would be available on Sierra Charts and NinjaTrader. That basic package that he was talking about for the scalping 6 has the absorption, the buying exhaustion, your selling exhaustion, measured move, which I absolutely love. And I saw a question someone had asked earlier, is this the measured move that you see Ray talking about so often? And yes, you may see him doing a measured move on TradingView more often. But yes, it is the same concept, everything that's built around the measured move. You got the pressure line and Baltic. So that's a great package for you for getting started. And Michael, I don't know if you heard me asking David, and he said that you could run this package on Ninja with just, the basics. So everything that is in the scalping 6.
Just on that point, Kim, I mean, I personally haven't used a trial version of Ninja, but I thought they included the level 2 data, or it was possible at least to include the level 2 data as part of the trial. On Sierra, they will usually give you something like Service Pack 5 to start with, which has that included. So you may have to check for Ninja, but certainly on the trial version for Sierra, it's definitely possible. I'm sure a few people have asked about can I use this on Ninja trial version, and I've said yes, and they've gone away and haven't come back to say no, I can't. So I'm assuming it's good to go. But if anyone knows different, then let us know.
And I've had several tell me that they do use the trial version and it's worked. So I agree with you on that.
Right.
And then we didn't go through this today because we didn't have Greg with 3Gs, but the other tool that we've been referencing often in our emails and in some of our videos would be the big board RGL sentiment indicator with the aggregate volume um, and that's available only on TradingView for now. But that is a super valuable tool. So we do have a few tools on both of those. The two different packages that David has available is on the often suite is the special scalping 6, which is your pro starter package, and then the full trading enhancements, which he showed you is quite extensive. So make sure when you're, looking at it, these are going to give you tools to help you getting in trades, managing trades, and just build your confidence. We kind of approach this in a different way with the resources, the indicators, and the tools. Is they're really built. These guys have made these tools, to enhance what they're doing to serve as an assistant um, to their trading because they know what they're looking for because of the classes that Ray has taught. So there you go for that. That gives you the two different ones on this compassfx.com / OF dash suite. You'll be able to see the different prices and the two different packages that we have available there. And then the same thing that we have on the trading view if you're using trading view. And so you can get the scalping if you don't already have it for $147 or $297 for the full package, and then $129 and $229 on the trading view. So that gives you a couple different options. And I think we have the absolute best tools on the planet, and they're at the absolute best price. These could be, some of these tools are out there for, a package like this are out there for thousands of dollars. So, but, these tools are what our traders use to help them get in the market and manage their positions. So hopefully that helps you with that. And along with them, you're going to find some really good classes based around the tools that you've seen, and a number of order flow sessions come with them. And like Reeve has shown exactly, our traders show exactly why they use these tools, why they're so valuable to them. So you definitely want to check that out. No, and there is no order flow on TradingView, so that's why these tools are just on TradingView. But I mean on Ninja or Sierra charts, there's no depth of market on TradingView. So that's why the platforms are different. So they're different types of tools. Hopefully that answers that question. As Ray says, using these tools help you get in and manage the trades. And Reeve had said the other day, making the monies. Show me the monies, as we always want. And we've got Ray's just finishing up with the program trades and the trade logs. So for those that are joining us in the room, that's something new and exciting that is coming. So all of these tools are going to really help you with these. So when you see um, what's happening in the market, what you want to be looking for, and the tools will help you get into those trades. So if you want, you can come in and join us in the room. We've got a special that we've had. I think we're going to be finishing up this special. This will probably be the last time you're going to see that, where it's just the option for the monthly. Most of the people that come in, time with Ray is super, super valuable. So you can come in and do a monthly, or you can do quarterly, 6-month, yearly. We have several options, but the main thing is being able to have time. You've got our daily trade sessions, our class sessions, and it allows you to be able to take theory and apply it as you can see it in the markets, which is super valuable. And you do get the um, Pro package for Sharp 6 and the big board indicator, and those are yours to keep even if you just stay in for a month. So we've never offered that before, and I think this is going to be the end of that, because we're going to go to a different model for people coming in. But we'll make that available one last time for you guys. So as you can see, you've got a monthly option, a quarterly, you've got the Sierra chart or Ninja tool special offer, and the trading view. So lots of great options. So go check them out. And Theo, yes, those that you saw there were like that Ray's putting in there. They're not from the trading view package. That was on the page from Ray for the program trades. Yes, we're super excited about that, to have the trade log. That'll be rolling out shortly. And so I feel like that's going to be the focus of our classes coming up, is really learning how, who's in the market, being able to identify those, matching up these different trade strategies to go with that, which will help a lot of traders, especially traders that are working on the funded accounts or just looking to get consistent. So that's where we're going to be going with that. And I'm going to go ahead and I'll stop the recording. But if you have any questions, you can always reach out, kim@compassfx.com. Schedule a call, get with us. But we're super excited to get started in. I think August is going to be a great month for us in the room.